Just take a look at information for what it is. Don't put a spin on it. Don't bend it or twist it. Just watch it. However, today that's difficult to do. The media receives information through particular channels in order to ensure that the public remains largely unaware of what would upset them and keeps them docile. This cannot hold back the rumble of the earth. Hold still and watch carefully. Magic tricks can only temporarily disguise reality. Today we're going to look at the fake markets, but first I wanted to cover what the VP Pence had to say, what Warren Buffett had to say, what the jobs numbers look like, and the fake markets to begin this video. Here you can see the Dow Jones as I record this video, which is basically in the later half of the trading session on Friday. We're looking at the Dow going up 215 points, and it has basically erased all the losses from the previous two trading sessions. It's fantastic. It's wonderful. Now, they happen to ignore a few pieces of information, but that's usually the way it goes. This is only about looking at the information which makes stocks go higher and trying as much as possible to ignore what we have seen here time and time again, but that information remains to be noted by the public simply because of the way information is gathered and disseminated. This here, if you look at it, the jobs surging in April, unemployment rate falls to the lowest since 1969. So we have an unemployment rate right now of 3.6%. And I want you to gauge, look around your environment. Do you think that that the actual amount of unemployed people is 3.6%. Does that seem very realistic to you? Do you think that maybe it could be higher? Could it be 5%? Could it be 10%? Could it be higher? When we look at statistics, of course, we can see the numbers. If you look at the U6, for example, which is, I believe, over 7% still, that number there shows you people who, due to economic reasons, have not been able to find full-time work. So if they're working 1 hour a month, that is considered to be fully employed according to these statistics. And of course, if you've been looking for work for a while and you can't find a job, you're then wiped off the statistics. That really manipulates it, of course. And then we have individuals who are working 2, 3, and 4 jobs. And these people, of course, skew the statistics also. But let's just report a rate of 3.6% so everybody will shut up. And that's really what they do. This works time and time again. Every month, we see the exact same thing. They post fantastic jobs numbers every single month. And yet the public doesn't care that it's fake. They don't care. Look in the comments. Look how many people are saying, shut up, the economy is fantastic. This is what I mean. We have a whole bunch of people who are enslaved by the central banking system, and they don't want it to end because they have 7 shares of Amazon and they are really worried that all of their hard-earned savings are going to be destroyed. But it is the central banking system itself that created this magnificent collapse that will happen. And it is only a matter of time. The higher up it goes, the bigger the fall will be. And that could be in a way where you see Venezuela, for example, stock market hitting new highs all the time, but the currency devalued significantly. Now today, they are going away from what they used to. We're not going to be watching inflation. We shouldn't be watching inflation, I should say. And we're going to look at other factors. Well, they've been hiding inflation. We've talked about this many times here on the channel. But I wanted to switch gears just for a minute before I actually do cover that. Now, Warren Buffett. Okay. There's a lot to Warren Buffett that a lot of people don't know. First of all, he's a well-read individual, and I say that very lightly. The individual reads all day and night. And his right-hand man, Charlie Munger, the two guys, they read all day. Okay, so they know what they're talking about, that's for sure. But of course, they're on the inside. They get the sweetheart deals. I don't necessarily look at what they're buying and suggest, okay, well, it's time to buy that because Warren Buffett owns it. Although a lot of people, many people, in fact, do this. Anyway, look at this. Warren Buffett says, no textbook could have predicted the strange economy we have today. Sounds a lot like what we talk about here on this channel. Buffett highlights that unemployment rate remains so low, yet interest rates and inflation are not rising. At the same time, the US government continues to spend more money than it takes in. So these typically, historically, would have created a crisis at this point. But today that isn't the case. These conditions are not sustainable for the long term. That's Warren Buffett himself saying that. Quote, no economics textbook I know that was written in the first couple thousand of years that discuss even the possibility that you could have this sort of situation continue and have all variables stay more or less the same. All right? So he makes that call right there. I wanted to go further into what he said actually because it's interesting. Okay, so there's a few points that I wanted to make both on the top section and the bottom. So the quote at the top is also what I read to you just now. Basically what he's suggesting is that the low levels of inflation, the unemployment numbers, all of the stocks being so high, all of these conditions do not make sense historically. This is a person who reads day in, day out. He knows what's going on. He knows exactly, and he is saying it doesn't make sense. Now, that doesn't mean he's not going to buy stocks right now. He's probably going to buy more, probably going to go acquire more companies, but he's just saying it doesn't make sense. Things are completely messed up. That's what I'm saying. That's what he's saying, although we disagree on certain things, obviously. I really do respect the level of knowledge that this guy has. There's no doubt about it. I don't think our present conditions can exist in terms of fiscal and monetary policy and various other elements across the political landscape. I think it will change. I don't know when or to what degree, but I don't think this can be done without leading to other things. Now, he's being very vague here, but I do believe what he's suggesting is all the quantitative easing, all the reduced interest rates, everything they've been doing to stimulate the economy cannot persist forever. Okay, that's what he's saying here to make it very general as well. He is not saying, okay, there's going to be a crash tomorrow. Not saying that at all. In fact, he says that the economy is doing well. But what they have done to the actual markets, to the financial system, is unprecedented. And the fact that it hasn't created some sort of chaos at this point is strange, according to Warren Buffett, the historian in this case. That's what I wanted to mention here, and I do completely agree with what he has to say. But if you ask the VP Pence, he said that the Fed should cut interest rates and reconsider its dual mandate policy. So don't look at inflation. Don't do that. We just want to create more employment, and so you should cut interest rates. Why would you cut interest rates if we just saw fantastic results in the jobs numbers? The results are fantastic. What are you hiding that we are not looking at right here with these jobs numbers? You need room. Do they not understand this? You have to have room so that when there is a crisis, that you could then bring interest rates down to create stimulation. But if you're already stimulating, you hit the floor, what are you going to do? Are you going to go negative? There's only so far you can go into the negative for it to actually benefit. In fact, none of those economies that have introduced negative interest rates have really seen any benefit from it. If you look at all of the instances that we have witnessed, there hasn't been any actual benefit specifically mentioned from these cases. But that's where we're at today. Now I want to talk about China and the US, the trade issues that have been going on. We can see that in the media, they have projected we could have a deal within 1 week. Okay, you saw that. We could be done. We're done. Okay, 90 days only. It's going to be 90 days, hard line. We get to the end of the 90 days. Okay, we're going to indefinitely stretch this out. Certain factors will take up into 2025. Let's just not worry about that. The deal is done. It's set in stone. Have no fear. Stocks keep rising every day. There's new tweets sent out making sure that everybody is docile, right? You've seen that all. Well, look at this out of the South China Morning Post. I want to draw your attention to the very top paragraph as well as the very bottom. Messages from the United States camp. Next week's talks in Washington with China could be the last round in efforts to end the year-long trade issues that have been tempered by Beijing's negotiators, who have suggested that the tactic to generate pressure should not be taken seriously. Okay? Let's see this here. Looking at this. It's the same tactic as the U.S. threatening to raise tariffs. It is merely smoke and mirrors to exert extreme pressure on China. You don't have to take it seriously. They are saying we are not going to be pressured into a deal. They aren't agreeing on what's going on between the two of them, and they are suggesting that we are just going to keep our patience. The markets have risen, economies have supposedly gotten better, at least according to the fake stats. So what is the rush to then go out there and give in on their side? Neither side wants to go back home and say that, they have given in. They don't want that. They obviously want to both come out as winners. It's going to be very difficult. Each side is going to have to make compromises. We've already seen some notes about one side compromising or the other, but actually out of all this period of time over the last year, there hasn't been anything concrete, nothing set in stone, and this information is all hearsay, really, when you think about it. Yet all of the good news, stocks go up. All the bad news, it comes down just a little bit. Then you get more good news, it comes up a lot. Bad news, okay, it just comes down a little bit. And it's funny the way that is, because the algorithms are programmed in such a way to really make sure that this goes a lot higher, not on the way down. They don't want to do that. They're programmed, obviously, to see the benefit in this. Look at the ISM. Look at the manufacturing here. We have watched this all throughout 2018 into 2019. It has been declining, okay? There are various factors here that we can look at, but just basically, I just wanted to show you the manufacturing heading down, as we have seen all of the reports coming out. Oh, everything is fantastic. Even the non-manufacturing NMI stat is looking terrible right here, but just wanted to show you that you can see jobs numbers, but then you can see other data out there that makes a lot more sense to me based on these other things, like this, for instance. We are seeing these locations of all different types of stores, not just retail, but there have been all types of different businesses out there, and I have shown you a full breakdown of all of that. I will link to one video at the end of this showing you the most recent video I've done about store closures. In fact, we are at the thousands and thousands of locations that have been closing throughout the year, and there have been a couple thousand that have opened up, but overall we are seeing many closing. This happens to be CVS in this instance here. Now you got to remember, by the way, you see 46 locations closing. Think about how many people work at each location. Think about the construction involved. Think about everything that goes into maintaining a store that large. There is a lot of people. Think about, you have all the facilities that are there. Maybe if it's let's say it needs refrigeration for some particular reason at a store, that has tradespeople involved. If there's repair work to be done, there's other people that don't necessarily work for that particular store, but they are businesses that come in as either tradespeople or services that are provided to the store, which are not current employees. That's going to have an impact. Rising prices pinch car buyers in April. This is one stat that I've been watching. When you have cars that are so excessively expensive, people are stretching it out just like their iPhone. They're not getting the new one every year. They're waiting 3 years. That's obviously having an impact. At the same time, apparently the stocks just don't care because Apple stock keeps rising, even though the iPhone sales actually are plummeting. But this just shows you what's happening. You could see with the car manufacturers, they're not doing well, but what do? They just increase prices and people get pissed off. Now this right here is something that is an economic statistic when you really think about it. Looking at the data that this encompasses, it's terrible, but openthebooks.com has a lot of stats like this, and I think that you should check it out. But this is San Francisco from 2011 to 2019, the human waste reportings. Yes, you heard me correctly. These are all the different reportings. All you see is like a bunch of brown and black dots here, but you can actually zoom in. These are all of the human waste reportings for San Francisco. That's just San Francisco, by the way. Probably see this on a wider scale. But what I wanted to show you is that you have the most expensive homes, you have rents that are ridiculous, you have all of the Silicon Valley, the businesses that are making all kinds of money. At the other end of the spectrum, you have so many people living on the streets today, and this is one way to look at that will not show up on the stupid unemployment numbers. Look at how many human waste reportings there are in this one city. This is unbelievable, and it's not going to show up in something that the BLS reports to you. And unfortunately, people will be swindled. Just look at the comment section below. for a bunch of examples. That's all for this video. If you found it informative, please give me a thumbs up. It really drains me to talk about stuff like this, but here we are. If you want the financial education that was not taught to you in school, these two books have everything you need, top to bottom, A to Z. I'm talking about the foundation, making money, reducing your debt, tax incentives. All that data is available here. Take a look. Link is below. If you want the audiobook, that's available at themoneygps.com. If you want to find out about the 6,000 stores plus that are closing today in the United States, you have to watch this video. I go through it all. Check it out, and I will see you there.